Hello and welcome to Business Incorporated this Friday, October the 14th. Thank you for joining us. I am Bolaji Akinwale. Today on the program, President Muhammadu Buhari is to meet German Chancellor Angela Merkel today in Berlin. And Samsung loses billions of dollars to scrapping of its Note 7 smartphone. Plus, India prepares BRICS conference. We'll begin with our top story, which is the visit of President Muhammadu Buhari to Germany, and he is expected to meet with the German Chancellor Angela Merkel in Berlin as he begins his three-day official visit to the European country. As part of events lined up for President Buhari, there will be a reception with military honors. After that, both leaders are expected to talk about the fight against terrorism and refugee policy. The president is also to confer with Mrs. Merkel on issues of shared interests between Nigeria and Germany, including further cooperation on security, the humanitarian situation of internally displaced persons, and the rehabilitation of the Northeast, as well as trade and economic relations between both countries. At 2:15 Central European Time, a press conference will be held between President Buhari and Mrs. Merkel. And later, President Buhari will be received by Joachim Gauck, the president, in the Bellevue Castle in furtherance of that meeting. And looking at the administration's objective to attract more foreign investment and create economic opportunities in the country, President Buhari will participate in a business forum in Berlin with leading German companies already active in Nigeria and other prospective investors. He is also expected to meet with representatives of the Nigerian community in Germany. His visit ends on Saturday, October 15. And European stocks were higher in morning trade on Friday after strong inflation data from China helped to calm nerves over global growth prospects. Let's take a look at how the markets are doing at the moment. Annette Wisbach is DWTV financial correspondent. She joins me from the Frankfurt Stock Exchange. Annette, it's great to have you on the program. Now, it seems China came to the rescue of the global markets through its strong inflation data, which supported the mining stocks. Tell us more about this.
Yeah, actually, it not only supported the mining stocks, it was actually a boost for the general market everywhere, also here in Europe. We have a very, very friendly trading session in Germany, which is mirrored also in other European countries. Of course, if inflation is higher than expected in China and with it also producer prices higher than expected, that also means that the Chinese economy is potentially growing more than we had expected, and that is very good news because China remains one of the biggest driving engines for the world economy, and above all, countries like Germany, so much export oriented, are benefiting from a China which is in good health.
Now on tap today is September U.S. retail sales report and speech by Federal Reserve Chief Janet Yellen for more clues as to whether a U.S. rate hike is likely before the end of the year. How is the market likely to respond to these news?
Well, actually, the U.S. retail sales came in just as expected. There's nothing we are actually seeing in terms of market reaction. You see behind me the big billboard. If U.S. data is coming out, which is better than expected, we'll see a jump also here on the German market immediately. So this came out in line. We'll soon get also consumer confidence data out of the United States. And then, of course, the big highlight of the evening is Janet Yellen's speech. Everybody will look at that speech or through that speech looking for indications as to whether the Fed might eventually raise rates again in December or not. And a lot of movement in the currency markets are depending on such a speculation. Looking at the currency market, we already see some movement towards the euro going towards 1.10 or towards the US dollar, which means I think there is a growing amount of people who believe that the US will actually hike rates.
Now, data from the European Automobile Manufacturers Association shows that new car sales in the European Union rose 7.3% in September, thereby pushing up auto stocks like Renault and Chrysler. Are there other stocks that were impacted as a result of this data?
Well, actually, car stocks across the board, like the big ones, VW, Volkswagen, BMW and Daimler, they're all trading quite positive during the course of today. Looking at the car sales, what is very surprising is that Spain and Italy are the best performer in terms of percentage gains, but Germany, the big market Germany, is counterveiling weaknesses, for example, in the UK. So it's still Germany is the driver here when it comes to total volume sales. And looking at which cars are actually bought, preferably, it's the luxury cars who are doing best, with BMW, Daimler and also Audi, which of course belongs to Volkswagen, adding almost double-digit numbers.
Thank you so much. And it's with back DWTV financial correspondent reporting live from the Frankfurt Stock Exchange. Still from the markets, this time in Asia, where the numbers finished mostly higher on the final trading day of the week, reversing some early losses as investors weighed price increases in China and the possibility of a U.S. interest rate hike later in the year. The SET index in Thailand advanced 4.18% despite Thursday's news of the passing of the country's 88-year-old king, Bhumibol Adulyadej, who had guided the country through decades of change. In Japan, the Nikkei 225 closed up 82.13 points, while the Topix index gained 4.88%. In Hong Kong, the Hang Seng added 0.98% by late afternoon trade, while Chinese mainland markets reversed some of their early losses to close mixed. The benchmark Shanghai Composite finished up 2.3 points at 3,063.73. The Australian shares moved little, where the benchmark ASX 200 closing nearly flat at 5,434. And the total costs of pulling Galaxy Note 7 smartphones off the market will be at least $5.4 billion. The South Korean tech giant had earlier already lowered its third quarter profit guidance by $2.3 billion. It said that it expected an additional hit of about $3 billion. The Note 7 was recalled last month after battery fires, but when replacement phones experienced the same problem, Samsung scrapped the device. The premium phone, launched in August, was meant to compete with Apple's new iPhone 7 at the top of the smartphone market. Despite the setback, Samsung Electronics still expects to make 5.2 trillion won. That's an equivalent of 3.7 billion pounds in operating profit during the third quarter after the recall loss. And earnings season kicked off this week in the U.S. with Alcoa and the major banks like Citigroup, Goldman Sachs and JP Morgan to round up the week. With more on the U.S. market and what traders are watching, here is Jill Malandrino, VOA business correspondent, joining me live from New York City. Thank you, Jill, for your time.
Of course. Good morning to you. So
right.
It's been a busy week for traders in the U.S. Stocks fought back early losses on Thursday following 1% declines in the major averages on weaker Chinese export-import data rising expectations of a rate hike after the Fed minutes, and more negative profit warnings from companies like VAC and CVTI, and also, of course, geopolitical tensions in Yemen. Alcoa also delivered disappointing earnings, which hit the industrial and materials sector. There's some technical levels we were looking at. The Dow recovered after dropping below the key 18,000 level earlier, and the S&P 500 fought back, holding key technical levels as well. This was supported by a reversal to the upside in crude oil, despite the first build in inventories in 6 weeks, and a lift in airlines with Delta's better than expected earnings. Healthcare rallied as well from a recent beating in political and biotech headlines. Outside of bank earnings, Wells Fargo CEO resignation is key for traders too. Sales practices and regulations overall will be a major issue through and after the national election in the U.S. Looking to trade on Friday morning, futures up really nice, pointing to a stronger open in front of a midday speech by Federal Reserve Chief Janet Yellen. And, of course, we had stronger retail sales data.
We'll get back to the speech later on. But speaking of elections, what is the general consensus following the contentious debate on Sunday night?
It was quite a debate to watch. We still have one more on the horizon. Of the two candidates, Clinton is viewed as more predictable, almost a continuation of the Obama presidency, which is why there's a big focus on the financial and healthcare sectors. Markets seem to feel they know what she would do in office, and they're more or less comfortable with her. Trump, on the other hand, he's being viewed as introducing more uncertainty on economic policy, among other things. This isn't necessarily a criticism. In many ways, policies that diverge from the Washington consensus are the point of Trump's campaign. Longer term, the effect of the election will come down to fundamentals and how effective the eventual president is in pushing through his or her policies. Now, there's a big difference between what a president intends to do and what he or she can actually accomplish once in office. The latter depends on the composition of Congress and the president's ability to work with both houses, regardless of which party is in power. Now, according to Commonwealth Financial, there is some data to analyze at this point. We know that Democratic control of the Senate is possible and Republican control of the House is likely. No matter who clinches the presidency, divided government is very likely to continue. Now, historically, divided government has meant that any legislation passed had broad support. Parties don't push through partisan agendas, which tends to be good for the economy overall.
Okay, the next near-term catalyst is the FOMC meeting on November 1st and 2nd, which will be determined if the Federal Reserve will indeed raise interest rates. What are the odds this will happen before the U.S. national election, and why is this so important, not only to the U.S. markets, but the global markets?
Well, markets are only pricing in about an 8% chance of a rate hike at the Fed's pre-election meeting, which seems to fit with the historical pattern of hikes being really rare immediately before an election. However, markets are pricing in nearly 70% chance of a hike at the Fed's December meeting, which also seems to be a better fit with history. The reason why global markets are keen to what the Federal Reserve does with its monetary policy is it dictates, or at least it sets the tone to how other central banks may take direction. The biggest impact is to the foreign currency markets, and this is why investors need to care, not only just investors, but consumers. Many currencies and economies are pegged to the movement in the U.S. dollar. Africa in particular, or any predominantly importing region, they are impacted because wild swings in the dollar, the euro, yuan, or yen, that influences purchasing power and inflation to its consumers.
Jill Malandrino is VOA business correspondent reporting from New York City. Thank you so much for joining us on the program. Now, U.S. computer company HP Incorporated had said that it expects to cut 3,000 to 4,000 jobs over the next 3 years. The hardware business of the former Hewlett-Packard announced the plans as part of a larger restructuring effort. It is hoped that the cuts will generate some $200 million to some $300 million in annual savings for the firm, but they are expected to cost up to $500 million in charges. HP also issued a lower than expected earnings guidance for next year. The company said it expected adjusted profits for the fiscal year 2017 to be between $1.5 and $1.6 per share. Hewlett-Packard split into two businesses last year. They are HP Incorporated, which focuses on printers and computers, and Hewlett-Packard Enterprise, which sold its software business to focus on data storage. It's time for a break. When we return, we'll bring you more on Business Incorporated. Please join us again.